What is going on, everyone, and welcome back to Explain the Charts. Today is September 30th, 2025, and we are taking a deep dive into Meta Platforms, symbol Meta. The stock has had an incredible run this year, but we're seeing some consolidation now, leaving many traders wondering what's next. In this video, we'll break down the crucial news and events driving the sentiment around Meta. Then, we'll get into the charts, analyzing key levels on the daily, hourly, and 15-minute timeframes to map out our potential trade plans. First, let's talk about the news, because the narrative for Meta is overwhelmingly centered on one thing: artificial intelligence. The biggest headline is the massive $14 billion deal for AI infrastructure, signaling that Meta's demand for high-end chips is practically limitless. This comes on top of a projected $66 to $72 billion in capital expenditures for 2025, a number that initially spooked investors earlier this year. However, that fear seems to have subsided as the company's Q2 earnings showed a 22% year-over-year revenue increase and a 38% jump in earnings per share. This suggests their AI investments are starting to pay off by making ad delivery more efficient. But it's not all positive. The broader market is facing uncertainty with a potential U.S. government shutdown and new tariffs proposed by the Trump administration. We've seen Meta react negatively to tariff news in the past, so this remains a significant headwind for the entire market. Furthermore, some analysts are pointing to concerns like slowing user growth, talent departures, and the fact that Meta was recently deleted from the Argus focus list. Now, let's see how this narrative is reflected in the price action on our daily chart. As you can see, Meta has been in a powerful uptrend since bottoming out in April of this year after a significant sell-off. The stock rallied from below $500 to an all-time high of $796 in mid-August. Since hitting that peak, the price has been in a period of consolidation, pulling back and building a base. This massive gap up we see here on July 31st is a critical feature of this chart. This was a direct reaction to those blockbuster Q2 earnings and the major AI spending news we just discussed. The price jumped from a close of around $695 to an open of $775, creating a huge zone of potential support. Notice how the price came down to test the top of this gap area in late August and found strong buying pressure. This brings us to our key levels. The ultimate resistance is the all-time high around $796. A convincing break and hold above this level would signal the start of the next leg up for the stock. On the downside, the first major support level is the recent low we've been testing for the past week, right around the $740 to $743 area. If that level fails to hold, we would look for a potential retest of the top of that earnings gap, somewhere between $700 and $710. The low from April, down around $485, represents the long-term floor for this entire rally. Let's zoom in on that period from mid-July to mid-August to really highlight the event that redefined the stock's trajectory for the year. You can see the price was trading in a range before the earnings announcement. Then, this explosive gap-up candle on July 31st completely changed the structure, followed by a powerful rally to the all-time high. This price action demonstrates just how impactful the AI narrative has become for Meta's valuation. Understanding this event is key to understanding the current support and resistance zones. Now let's switch to the 1-hour chart to analyze the more recent price action. Here we can see the pullback from the mid-September highs more clearly. The price has been forming a short-term downtrend, with a series of lower highs and lower lows. For the past several days of available data, the stock has been consolidating in a tight range, building pressure. The key battleground appears to be the support zone between $751 and $755, based on the action from around September 23rd. A breakdown below this level would open the door for a test of those lower supports we identified on the daily chart. Conversely, if buyers can push the price back above the recent highs around $770, it could signal an end to this consolidation phase. Finally, looking at the 15-minute chart from yesterday's session, we can see the intraday battle playing out. The price action was choppy and lacked clear direction for most of the day, bouncing between roughly $740 and $750. This indicates short-term indecision among traders. For those trading on these lower timeframes, a break and hold outside of this range would be the trigger for a potential momentum trade. Watch for a spike in volume to confirm any breakout or breakdown. Okay, let's pull back to the daily chart and recap everything. Your key resistance level to watch is the all-time high around $796. Your primary support is the recent consolidation low around $740. Below that, the next major support zone is the top of the earnings gap near $700. So, what's the outlook? Let's consider two unbiased scenarios. In a bullish scenario, which I'd place at about a 65% probability, this current pullback is simply a healthy consolidation. Given the overwhelmingly strong fundamentals in AI and massive institutional investment, the path of least resistance remains upward. If the broader market remains stable, I expect buyers to step in and push Meta to break the $796 all-time high in the coming weeks, targeting price levels of $850 or higher. A dovish Fed or positive resolution to government shutdown fears would reinforce this outlook. Conversely, a bearish scenario, with about a 35% probability, would be triggered by a market-wide risk-off event or company-specific bad news. If the $740 support level breaks decisively, we could see a slide down to fill a portion of that earnings gap, with a target near $700. New tariffs being implemented or a worse-than-expected jobs report could be the catalyst for such a move. Keep an eye on upcoming economic data and headlines out of Washington. That's our in-depth analysis of Meta. Remember, this is not financial advice, so always do your own research before making any trading decisions. If you found this breakdown helpful, be sure to hit the like button, subscribe to Explain the Charts, and let me know your thoughts on Meta in the comments below. Thanks for watching, and I'll see you in the next one.